Dodgers give Freddie Freeman just what they needed, right?
The rich get richer, right?
Exactly.
Yeah, so. But can I tell you, I really do like Freddie Freeman.
What's that?
I really like him. Like he's a really good guy. He seems like a great family man. Oh, hi there, and welcome to the Attorney Patrick Smith Show. I'm your host, Attorney Patrick Smith. We will be with you for the next hour to answer your legal questions. Very excited, very happy to be here today. A gorgeous March Saturday here in the Sunshine State, so we will be with you the next hour to answer your questions. 877-943-9673. 877-943-9673. You can always email your question, Patrick at attorneypatricksmith.com. And with me, the gang, Yana, the Belarusian producer, and we have Jose, the call screener, back with us today, while Brian, the call screener, is on a well-earned vacation. And with me in studio, my very special guest, the one, the only, Dwayne Bischoff, CPA. Good morning, Dwayne.
Good morning.
Dwayne has been the CPA that I've worked with most regularly for, I don't know, gosh, Dwayne, it's been at least 10 years now,
Yeah.
Probably a little bit longer than that. So Dwayne is sort of the guy I go to for all things tax. We sort of teased this a little bit last week when we talked about kind of sort of the abnormal tax laws around the state and the differences and how people kind of tax things differently state by state, so the odd things they tax. So Dwayne's here today specifically to answer any tax specific questions you may have, in addition to me answering your legal questions. And we are happy to help any way we can. So your questions today can actually be legal questions or tax questions either. And that number to call in, 877-943-9673, 877-943-9673, or email me, Patrick at attorneypatricksmith.com. Dwayne, let's just start a little bit about you, kind of where you're from, background, that sort of good CV information.
So I'm one of the few that's born here in Tampa, and went to public schools, went to the University of South Florida, got married early out of high school, and started working for a CPA firm while I was still in high school, worked full time while I was in college, and went on my own probably about 25 years ago.
And Dwayne is an expert in all things tax. Anytime I have a complicated, especially income tax question, we were talking, and the 4 major transfer taxes. Attorneys get peppered with questions all the time about gift tax or estate tax or generation skipping tax. But when it comes to income tax, our response is pretty uniform, I think, for a lot of attorneys, just saying, call an accountant. Because when it comes to income tax, it is one of those situations where it is so nuanced. And I'll never forget, I was doing a research, a deep dive on a particularly complex, it was an issue regarding, I don't want to bore the audience, but it was a detailed tax issue. But I got down so far in the footnotes, and those C so-and-so, and I had gone to like 10 of those. Well, the last footnote I chased down the rabbit trail said, congratulations. If you've gotten this far and you still haven't figured it out, just hire an accountant like everyone else. And I'll never forget that. And it taught me a valuable lesson when it comes to income taxes, which everyone pays those if you earn an income. And it's one of those things where you need a professional a lot of times, because we talk about, on our show, we talk about the people who do pro forma doc services and things like that. And there's lots of tax services out there. So Dwayne, talk a little bit about why people need a tax professional in their life.
Yeah, so there's some good software out there, but you have to have an idea first of what you're doing. A typical example, I had a guy who had he created a corporation, and he thought he would use TurboTax to do his return, and he filed his return as a sole proprietor for years and years and got a notice from the state of Florida that he never filed his corporate tax return. He said, sure, I did. Well, he didn't even know that it takes a separate tax return.
Bless
So
his
there's
heart.
some basic information you have to know. So the turbo taxes and those things, they're fine if you're an employee without any other kind of complications, no investments. You just earn a W-2. It's pretty basic. You know, you can get away with it. Once you start getting into, if you have your own business, if you have investments, if you have rental properties, there's a whole lot of complicated rules and that you can get stuck with. You may be leaving yourself short with deductions if you don't, you know, get a professional.
My anxiety spiked when you said that about that, because that is like one of my worst fears, is missing something. And so that's the reason why I work with not only Dwayne, but having a tax professional gives me peace of mind of
Yep.
knowing that it's covered and protected. If you have a question for myself, the legal questions will come here. The tax questions will head straight to Dwayne. He's with us for the hour. 877-943-9673. I'm your local Central Florida attorney, Patrick Smith. 877-943-9673. And with us in studio, my very special guest, CPA Dwayne Bischoff. You can also email your questions, patrick@attorneypatricksmith.com. All right, let's go to Plant City and let's talk to, is it Joey? Hey, Joey. Welcome to the Attorney Patrick Smith Show. How are you today? Happy to do it, Joey. How can we help? So, well, Joey, first of all, congratulations on the retirement. How many years, or do you mind sharing what you did previously from which you retired? Incarcerated students. Sounds like you definitely had a captive audience, it sounds like. Okay, all right. So at the end of the day, was this residence your primary residence? Is it your primary residence, your homestead property? Okay. So the good news is, as long as it's within a half acre in the city limits, or if you're outside of the city limits, it's good up to 160 acres. It's already protected, Joey. There's nothing additionally you need to do. The state constitution under Article 10, Section 4 gives you a creditor protection, a homestead creditor protection. From any creditors except two. There's exceptions for if you don't pay your property taxes, obviously. And then there is an exception for what we call a mechanic's lien. If you pay or if you hire someone to do work on your property, like put in a pool and then don't pay them, they can obviously lien the property. But outside of those exceptions, your home's already creditor protected from like an assisted living facility. You would have to actively go out a way to compromise that protection. And one of the things you can do that would compromise that protection is add a child's name to the home. Because if you add a child's name to the home and that child already has their home, they can't have two homesteads. So you've at least lost part of the homestead exemption. And if you add a child's, go ahead. Well, and here's the thing, what I would suggest, when you talk about adding the child's name, is your goal really protecting it from the creditor, or is there some other goal you have in mind? Yeah, then there's the second goal. There's the second goal. So you want to protect it from the creditor and you want to pass it to the children. To best achieve that, if you add a child's name to the home, you're going to trigger gift taxes, which of course Dwayne can expound upon that. In addition to that, if you put a child's name on the home, they have their homestead, you lose part of your homestead exemption because they can't have two. And now if their name's on the deed and they're in some sort of accident that generates a liability, like an auto accident, or if they go through a divorce, now your property is potentially subject to that matter. The most optimal way to achieve your goal, to preserve the existing homestead exemption you already have under the state constitution and pass it along to your children as a tax efficiently and efficiently economically as possible, would be to create something called a simple trust, it sounds like. Because the trust will bypass the probate process, which is your goal, passing it along post-mortem as quickly and simply as possible, while avoiding gift taxes, liability exposure, and maintaining your 100% homestead creditor exemption. All right, so yes, ma'am. Yes, ma'am. We'll be happy to help you with it. If you give us a call at the office on Monday, we'll get you started on that. Okay, Joey? Joey, thank you. And again, congratulations on the retirement. I think that's fantastic. Enjoy. Yes, ma'am. All right, you're listening to the Attorney Patrick Smith Show. I'm your host, Attorney Patrick Smith, and with me in studio, my very special guest, CPA Dwayne Bischoff, here to answer your tax questions while I'm fielding the legal questions. Dwayne, a little bit of a tax consequence there. A lot of people do that all the time where they add a child's name to stuff and not realizing there's a present interest annual exclusion and there's gift taxes. Maybe you could expound a little bit about that.
Right. So what happens is they have created a gift. The gift is at fair market value, and so the problem comes in is when, let's say it's a house and mom bought the house 30 years ago and it cost $30,000, and now it's valued at $300,000. So she's passing it to them on, at a value of $300,000, but their basis is at the $30,000 level. So when she passes and they sell this property, they have a built-in $270,000 gain, whereas if they did what you just suggested and put it in a trust and they received a post-mortem, they would get under the current laws, they'd get a step up to the $300,000. If they sold it, they'd have no gain.
There you go. So if you have a question for myself or Dwayne, 877-943-9673, 877-943-9673, or you can email me, patrick@attorneypatricksmith.com. All right, let's go to my home county of Polk County and go to Lakeland, and let's talk to Craig. Craig, welcome to the Attorney Patrick Smith Show. Hey, Craig. Dwayne, it's all you, buddy.
Yeah, so the real thing is that she's got a sale. So you would look at the value of the house, when she bought it, compared to the value of the house when she sold it. And if you're a U.S. citizen, you have your tax on your worldwide income. So you would report it. If there was a conversion in currency to dollars, you'd convert it to U.S. dollars and report it on your return. It'd probably be a long-term capital gain. If the Nicaraguan country charged any income tax, you would figure out a foreign tax credit and get credit for the tax that you have paid there. They don't want double taxation.
And I have a follow-up onto Craig's question. So if you sold the Nicaraguan property and converted it to cash and deposited it into a Nicaraguan bank, because the funds originated in the sale of Nicaraguan real property, would you still have to file an FBAR?
Yes.
Okay, and talk a little bit about the FBAR. I think a lot of people aren't aware of that when they do business abroad.
Yeah, so an FBAR is anytime a U.S. citizen has a foreign bank account, and it's just an annual reporting that has to be done. You have to report the highest balance in each bank account that you have. You have to name the bank, the address, the account number. It's a disclosure information. The penalties are very severe.
That's what I remember, the penalties.
If you do not file those.
Yeah.
Yes.
Because the penalties are something like 50. Go ahead, Craig.
No, that's an unrealized loss. It's no different than if you would have bought Ford Motor stock and it's worth, I'm just making numbers up, $80, and it goes down to $20, and then goes back to $60. You don't get the loss. You get how you figure gain and loss is from the time you purchased it, the value or the cost you paid for it when you purchased it or inherited it, against the price you sell it for. The ups and downs of the market don't have any effect on it.
All right, Craig. How's the weather in Lakeland this morning, Craig? All right. All right, and one random question. Do you work for Publix? But you know someone who works for Publix. I was about to say, if you're from Lakeland,
Right.
you either work for Publix or you know someone who works for Publix. That's the headquarters for Publix, and Mr. George founded the company there, right there across the street from the Lake or the Lone Palm Golf Club. Yep. Well, that's great, Craig. Enjoy the rest of your weekend and good luck with that yard work. Okay. You're welcome. Yes, sir.
Right.
Alrighty, you're listening to the Attorney Patrick Smith Show. I'm your host, Attorney Patrick Smith. 877-943-9673. That's your number to call in today with your legal questions for yours truly or your tax questions for our special guest, CPA Dwayne Bischoff. Again, open phone lines, 877-943-9673, or email me, patrick@attorneypatricksmith.com. Special thank you to everyone watching on Facebook or watching on Instagram Live. We do appreciate you guys tuning in to Watch Live Radio, as exciting as that can be. And before we go to Robert, I want to introduce our next topic. Dwayne, you and I were doing a little show prep yesterday, and we were talking about interesting topics, and the topic that came up was that of crypto, because we were talking about how crypto in our respective fields presents very different, difficult challenges. From my perspective, it's the bequest of crypto accounts, Bitcoin wallets, and the idea that in our world, we have to value things on date of death. And when you have a regulation that says the value can be within 30 days either side of the date of death, because some of these are typically stocks and they're actively traded, they can fluctuate a lot. Well, Bitcoin can fluctuate a lot in 30 seconds, let alone 30 days. So that's our difficulties. Why don't you speak a little bit about kind of what crypto is from the tax perspective and sort of the difficulties in taxing crypto?
Yeah, so part of it is a question that's asked on tax returns now. It's something we have to ask all our clients. Have you bought, sold, or held cryptocurrency? The IRS wants to know, and under penalties of perjury, you're answering that truthfully. So the crypto now, it becomes difficult in, again, the valuing. When is it valued? So if you buy crypto and just hold it as of right now, there's not a tax on that until you sell it down the road. So it's treated kind of like a stock. What did you pay for it? What did you sell for it? The difference is a gain or loss. But since it's a type of a currency and treated like a currency, so if you used it to go buy a car, you have a gain or loss. You have to figure out your gain or loss. Okay, how much did I pay for this? What's the value of this when I sold it? If you use it to go to dinner and you buy dinner, you spend $100 at dinner and pay with crypto. Now you have to have a gain. So imagine every time you spent money that your currency we have today are dollars, that you had to figure a gain or loss on each transaction. That's what you have to do with Bitcoin or with crypto.
And that's the difficulty. I mean, there's several difficulties here with it. First of all, it's designed to be an alternative to the centralized fiat system where we're cash based, and it's supposed to be more egalitarian. It's also very unregulated,
Right.
and that's another concern. But like we were talking before the show, it's kind of the equivalent of this Bitcoin, this peer-to-peer pay system, where if you go into a restaurant and you're paying for a meal, if I said, to use what we were just talking about previously, if I use public stock to pay my tab,
Right.
I mean that's sort of the equivalent of what we're doing. We have to do the calculation on the realized gain and effectuate all that. And it's also extremely unnerving because when you count it as an alternative to the fiat system. If you ask me who created the financial system as we know it here in the United States of America, most people would agree that's Alexander Hamilton.
Right.
Ask me who created Bitcoin. I mean, it's the, I believe his name is Satoshi Nakamoto, but no one knows who Satoshi Nakamoto is, and there's this big mystery and conspiracy theory behind who it may be. But it's concerning to me that it almost feels like it could be anyone, or it could be a group of someone's, but the anonymity is unsettling to me, and I think that's part of the reason why it's so volatile, is there's so many unknowns about it.
Right, and I think that's some of the attraction of it too.
Yeah, absolutely.
Is the privacy of it,
Well,
and they can't really. It's hard to track. They can't track it,
and the speculative nature of it.
Right,
Absolutely. The risk and reward. If you listen to Matt Damon, I mean, what is it? Fortune favors the bold, or whatever that saying
Right.
is that he was saying
Right.
in that commercial. So yeah. Anyway, if you have a question, tax question, legal question about crypto and how it relates to legal and tax, we're happy to help. 877-943-9673. 877-943-9673, or email me, patrick@attorneypatricksmith.com. All right, let's go to Buffalo, New York, and let's talk to Robert. Robert, welcome to the Attorney Patrick Smith. Are you really in Erie County right now? My wife's family is from North Tonawanda area, so it's great to talk to you. I think you're our first caller from New York. Okay? Many years ago, my wife's grandfather ran the Polish meat market there in Tonawanda. How? It's a small world. Robert, how can we help you today? If I'm driving a rental, it's fine. No, I'm just saying. So, what kind of vehicle? If you don't mind sharing, Robert, what kind of vehicle is it? A Chevy Malibu. I thought you were going to say it was like a '66 Vet, and I was going to say I completely understand your hesitation in letting people borrow it. I think it's a matter of this. I think you have to make sure, number one, you have good insurance on the car. And I think number two, you have to make sure you're giving it to an insured driver. And I also think you want to make sure you're not giving it to someone that you know is a negligent driver, because you don't want to be accused of something called negligent entrustment, where you gave it to someone that you knew had, multiple DUI convictions or had a history of reckless driving or something like that. So if you have actual knowledge of their poor driving, I think that puts you on risk. But I think if it's just general, hey, someone wants to borrow your car, it's good for your car to run. So if you're up in Erie County for 6 months at a time, you don't want your Chevy Malibu just sitting there, and it's just gonna waste away sitting in the driveway. So you want someone to operate it, and as long as you're insured, and they're a reasonably good driver, I think you're in good shape there, Robert. Yeah, my experience with that, Robert, has been that personal injury and plaintiff's counsel will typically, in my experience, sue everyone. And if anyone's involved in any way, they'll sue them all and let them fight their way out. So I think that certainly if someone passed away, you can expect some sort of suit. But odds are, with good insurance, it's probably going to go away. If you want to really button that top button in terms of insurance, go ahead and max out home and auto and add an umbrella. Now, I'm not a financial advisor. You should speak to a good licensed financial advisor about the financial aspects of this. The same with any of you considering crypto out there. Make sure you consult a licensed financial advisor. And I think that is going to make sure that you can rest your head easy on the pillow at night if you have a good umbrella policy for $1 million or $2 million. Well, and I've joked with my wife because we love New York. Obviously, her family has a connection to upstate, and I love the city. And we're both big Broadway supporters. And, I've joked with her over the years about getting my New York State law license. And so maybe we'll just have to do it. Maybe I'll have to bite the bullet, Robert, and get my New York State law license and open an office up there, okay? All right, Robert, I appreciate you calling in. Have a great day. Alrighty, you're listening to the Attorney Patrick Smith Show. I'm your host, Attorney Patrick Smith. With me in studio, my special guest, Dwayne Bischoff, CPA. 877-943-9673. That's your live and local number, 877-943-9673. Or you can email me, Patrick at attorneypatricksmith.com. If you're out there and you have crypto, and you wonder, how do I bequest crypto in my estate plan? This came up when I was doing the show prep yesterday with Dwayne, and the basic rule of thumb here with crypto is the more specific you are in the document, the better. The general theme here is you don't want to rely on residuary clauses to capture your crypto, where that clause says, and any remaining assets to these people. That's not specific enough. You want something that says, and my crypto accounts here with this account number at this website. And a lot of people go ahead because it's dynamic, it's not static, it's changing all the time. They do what we call a separate writing memorandum that is referenced in the will or trust, and then they update that periodically as they move the crypto and update the accounts with usernames, passwords, how to identify it. And that is the most efficient way to bequest crypto. Specificity equals efficiency when it comes to bequesting crypto in your estate plan. So if you have a question about crypto, tax, legal question of any kind, 877-943-9673, 877-943-9673, or email me, Patrick at attorneypatricksmith.com. To reach me at the office during the week, 877-754-6764. That's your toll-free line to schedule your appointment for the Sun City Center office, Clearwater office, Haines City, any of those locations, 877-754-6764. All right, the call board is lit up. Let's go to Michael back in Plant City, and let's talk about real estate. Michael, welcome to the Attorney Patrick Smith Show. Oh, thank you, Michael. Well, I appreciate you faithfully listening. I have a question for you, Michael, before we take your question. How much is a flat right now? I knew it. I paid $30 for a flat during the first part of the season. It's amazing to me as soon as the festival ends, they're giving away the strawberries. Yeah. You're saying they saw me coming. Michael, I appreciate your patience. What's your question? Tell me just in your own layman's analysis, Michael, and I just want to hear your honest opinion. Just say it out loud with me. Does a judicial order from a judge trump an email? Which in your mind sounds like it has the authority in this position? Yeah, and I want to be clear because there's probably lots of judges listening right now potentially. So And we like it that way. We want the judicial order to trump an email. Can you imagine the public policy of having an email competing, even if it were on lateral with the judicial order, the chaos that would ensue from that? So no, I think you're gonna go by that judicial order. If they're unhappy with something in the judicial order, they need to petition the judge for a modification. Well, that's exactly it. This is why we do written agreements and written decrees, because memories grow fuzzy. And we put it in writing so that none of these issues occur. And I think that's the moral of the story. I think your friend needs to go back to their attorney and say, did I agree to this? If I did, great. If I didn't, I don't want to. And if the wife is unhappy, she could petition her attorney to try to get it modified. Yes. Now, now there is the possibility that the judge put in the order, unless the parties agree otherwise. I haven't seen the order, is my point, so I would need to look at the order. So it's possible that email could be in compliance with the judicial order, but nevertheless, it will not stand for the proposition that the email will ever trump a judicial order. However, the judicial order may permit the modification by email. Does that make sense? Okay. Yeah, it sounds like a wonky deal to me, but anyway, enjoy those strawberries. You too, Michael. Alrighty, you're listening to the Attorney Patrick Smith Show. I'm your host, Attorney Patrick Smith. With me in studio, my very special guest, CPA Dwayne Bischoff. 877-943-9673. 877-943-9673. Email your questions, Patrick at attorneypatricksmith.com. All right, let's go all the way down to Venice, Florida, and let's talk to Bob about some tax consequences. Bob, welcome to the Attorney Patrick Smith Show. Good morning, Bob. How can we help? Okay, so I'm literally, as we speaking, having to chart that out, Bob, because there's so many moving parts. It's the cousin's dog catcher's boyfriend's cousin. So just make sure I understand. So you have a friend who has a girlfriend, and they are mutually living in girlfriend's mother's home. Is that accurate?
His boyfriend's mother's home.
See, this is why we chart these things out, Bob. We make sure we get it right the first time. Okay, now that we understand the players, I'm going to turn it over to Dwayne so he can speak to the tax consequences on that, okay? Dwayne, it's all yours.
Yeah. So the tax consequences for the mother that owns the property is, if it's been her personal, has she lived there? Has it been her personal residence for 2 out of the last 5 years? Okay. Okay, so it's not her personal residence, so now it becomes the sale of a second home. So you'd have to look at what her basis is in the property, which is what she paid for it. If it's ever been a rental property, she may have depreciated it, so that would reduce her basis. So it'd be the difference between what she paid for it and what she's selling it for, without regard to depreciation, unless she rented it. That would create a gain or loss, and it would be reported on the Schedule D on a personal tax return.
And Dwayne, going back to basis, when you mentioned she purchased it for this price, when we were, as attorneys, classically trained on taxes and basis, again, they teach us just enough to be dangerous about these things. But it was our understanding, and correct me if I'm wrong or tell me if this has changed, if someone's gifted property and A bought the property at $30,000, but they gifted it to B when it was worth 20, so it actually gone down in value. B's basis is not the 30, it's the 20, it's the lower amount
correct.
at the time of the gift.
Right.
So you want to make sure you know that answer too, Bob. I think more than likely, the mother purchased the property, but also if it was by gift, you want to know the value that she paid for it and the value at the time of the gift. So that origin of where the property came from is extremely important in establishing basis.
Correct.
Yeah.
Yeah, that's the question. A lot of it's interesting. I met with a gentleman the other day who's from the Northeast, and they talked about, oh yeah, it's a rental property, but nobody ever reports it, and that is like foreign to me. I mean,
I'm pretty sure that's wrong.
it's definitely wrong,
Okay.
but it's like the common thing up on the shore in the Northeast apparently, and is unbelievable to me.
Oh my gosh.
But anyhow, yeah, they should be. If you have a rental, you should be reporting it on Schedule E. And because what happens if you have a rental property, the IRS, if they ever got looked at these transactions, it's depreciable or taken or should have been taken. So even if you don't take it, they act like you should have taken it and reduce your basis.
Well, and that's what they call a deemed event. They
Mhm.
deem it to have occurred, and a lot of people are playing chicken with the IRS right now. This is something we were talking about right before we went on the air. A lot of people are trying to pull a fast one on the IRS, considering that the IRS is extremely backlogged. You have the exact number. How many documents are they behind
Yeah,
now?
23.8 million.
23.8. There's going to have to be congressional response. There's no way you're going to get caught up from that without some sort of congressional relief.
Yeah, it's anything filed on paper. It's amended tax returns, it's tax returns, it's responses to their notices. So right now, if we send a letter responding to a notice, it takes them about 9 months to open the mail.
Well, and my concern is too, with this cloud of backlog going on, if it'll lead to more fraud. If the fraudsters out there will start to take advantage of that and try to weave their way in, which is only going to create more of a backlog.
Yep.
But anyway, Bob, did that answer your question? Well, welcome to the world of tax.
Yes,
Bob.
have her see a tax professional.
That's right. See a tax professional, Bob. And Bob, are you listening on the bone? 9:30 a.m. We appreciate you listening, Bob. Thank you so much. Yes, sir. Bye-bye. Alrighty, listening to the Attorney Patrick Smith Show. I'm your host, Attorney Patrick Smith. With me, my special guest, CPA Dwayne Bischoff, 877-943-9673, 877-943-9673, or email me, patrick@attorneypatricksmith.com. Dwayne, before we go to the very patient Joanne, who's been ever so patient with her question about crypto, give out your contact information. So if people wanted to talk to you privately off the air or schedule a meeting with you in the office, how would they do so?
Yeah, so you can call my main office in Tampa is 813-356-0400, or you can email me at dbb@cpaoftampabay.com.
All right, and Dwayne is available, and we let him make use of our office locations for our clients, so he does do a little bit of traveling to meet with appointments, and he'll be happy to help you. All right, let's go to beautiful Sarasota, Florida. Let's talk to Joanne. Joanne, first of all, thank you for your patience, and welcome to the Attorney Patrick Smith Show. Good morning, Joanne. Did you really? This Patrick was born there too, at Lakeland Regional Hospital. This Patrick was born there in 1981. When was your Patrick born? Oh my gosh, that's so close. Did you work for Publix as well? It's a small world, and what I've learned about Polk County is everybody knows everybody. And everybody talks about either Publix or the Red Lobster that used to be owned by Lawton Childs when he was walking Lawton. And there's a handful of like Polk County lore that always gets told every time you meet another Polk. What's that? Oh, Grady? Oh my gosh. Oh my gosh. How much do we love Grady Judd? Yeah, and the thing is, if you were to design a perfect sheriff for Polk County, it would be Grady Judd. God bless Grady Judd and the rest of the Polk County Sheriff and all the men and women of law enforcement throughout our Sunshine State, throughout our nation. They're amazing. Yeah, but you did a good move. I mean, Polk County's beautiful, don't get me wrong, but you're in Sarasota, Joanne, so you did okay. You have a question about crypto. Go ahead. My understanding is no, it's not tangible, and the research I was seeing on it was that, and Dwayne, you're welcome to correct me. You're certainly more of a crypto guy than I am, but you need a Bitcoin wallet in order to do this. And as I understand it, and this was staggering to me, there is over a market cap of over 200 billion with a B in cryptocurrency right now, and there's 32 million active crypto wallets, which is staggering. Yeah, so my understanding is no, it's nothing you hold physically in your hand. I think that's one of the allure to it, is the idea that it's not traceable. There is no paper trail, and that's why when I was talking about bequesting it, you really have to make extra effort to be extra specific, because there's no way to trace it down through a paper trail. But Dwayne, anything to add to that?
No, to be honest with you, you summed it up pretty well.
Yeah, I mean, it's one of those things that's just tricky because you can't hold it. But like I said, that's one of the things that makes it attractive to people, is that it is not, it's a paperless transaction. And people like that. They like having this peer-to-peer system that doesn't involve paper, and also that goes around the traditional cash system. So, Joe, well, I'll tell you this. So I had lunch in Polk County with a couple of buddies I went to high school with. This was years ago now. And the smartest man I ever knew, and I still know him to this day, but I was always so breathtakingly struck by his intelligence, because his family, all of them went to Duke. They were all amazing academics, and they didn't own a television in the house. They all read for entertainment. I'll never forget this. And they were the single smartest people I've ever met. He was telling me about and educating me on crypto years ago. And I said, okay, you've convinced me. And and I said something like $1,000. And he goes, hold on, that's a crazy large number for this. And I was like, if $1,000 is a crazy large number for this, how speculative is it? I mean, how unpredictable can it be? And that was what taught me my first lesson about crypto, and indeed my father's first lesson to me about investing in general was never invest money you can't afford to lose. And I kind of think that's your No. My dad is Don Smith, and he's an old Publix guy who worked with Miss. No. This is a buddy of mine. His last name was not Phillips. I don't know that he would want me to say his name on the air, so I won't. Well, Joanne, you're a delight. Enjoy Sarasota, okay? God bless you. All right, you're listening to the Attorney Patrick Smith Show. I'm your host, Attorney Patrick Smith, 877-943-9673. Give us a call now, live and local, 877-943-9673. I'm local Central Florida Attorney Patrick Smith. Multiple office locations throughout the Sunshine State to best serve you. And thank you to all our listeners down on 96.3 Sun Radio in Sun City Center. I will be there on Tuesday, meeting with my Sun City Center appointment. So if you want an appointment, give us a call, 877-754-6764. Again, that toll-free number to schedule any complimentary appointment for any of our office locations, 877-754-6764. Call in now with your question for our special guest, CPA Dwayne Bischoff. Alrighty, the number, 877-943-9673. Email patrick@attorneypatricksmith.com. Alright, let's go to St. Pete. Let's talk to Stuart. Stuart, welcome to the Attorney Patrick Smith Show. Sure, Stuart. Oh my gosh. praise God for that. I think you're not far off there, Stuart. I think it's the idea it's supposed to restore you, but I think it's also depending on the coverage, whether it's, they're gonna replace the vehicle or whether they're gonna give you value for what you lost. But that's policy to policy. Do you remember a couple weeks ago, I don't know how long you've been listening to the show, Stuart, but a couple weeks ago I had attorney Jared Bailey on. He's our personal injury attorney. If you give me a call at the office on Monday, I'll put you in touch with Jared free of charge. He'll talk to you and get you pointed in the right direction with a complimentary consultation, okay? Just call me at the office, 877-754-6764, and I'll be happy to get you in touch with Jared and we'll get you squared away. Yes, sir. You're welcome. All right, you're listening to the Attorney Patrick Smith Show. I'm your host, Attorney Patrick Smith, 877-943-9673. And you can email me, Patrick at attorneypatricksmith.com. All right, let's go to Tampa and let's talk to Robert. Robert, welcome to the Attorney Patrick Smith Show. Good morning. Hey, Robert, I have about 2 minutes. Can you make it relatively expeditious? Well, I'll let Dwayne answer that question. Dwayne, it was basically his loved one passed, left home property. It was sold. He received $20,000 as an inheritance, Robert. And your question is, do you have to declare that inheritance as taxable income? Is that accurate?
Yeah, so if you didn't own the property, if you just inherited the proceeds from a sale, then generally you don't. If the estate sold the property, or the trust sold the property, they would have a taxable event. If they then gave you the money, they could pass the gain through to you, or they could pay it at the estate level. You need to speak with the personal rep of the estate to see. But if the property was given to you, if you inherited the property through will and then sold it, then you would have to report that.
Robert, do you currently have an attorney representing you? All right, then I'm gonna hang up with you, wrap up the show because I got about a minute left, and I'm gonna give out the office number so you can give me a call at the office on Monday if you want. We'll be happy to help you. Okay? You're welcome. All righty. You're listening to the Attorney Patrick Smith Show. Dwayne, thank you so much for being with us today. It's been fantastic. And we were talking we didn't know how to make tax exciting, but I think we did a great job. I mean, we could have come on and talked about which one of the 4 transfer taxes is your favorite. I don't think that would have been a very good show. I think we did a great job with it. Hopefully you guys enjoyed it. Dwayne, your contact information one more time, please.
Yep. My office number in Tampa is 813-356-0400. And my email is dbb@cpaoftampabay.com.
And I'm your local Central Florida attorney, Patrick Smith. This is the Attorney Patrick Smith Show, and we will be back with you next week. So write this number down to call in with your questions, 877-943-9673. To reach me at the office during the week, 877-754-6764 to schedule your complimentary consultation, 877-754-6764, or email me, Patrick at attorneypatricksmith.com. God bless. Go Gators.